from Washington, D.C., this is Balance of Power with Joe Mathieu.
NVIDIA is wrapping chips for China. Welcome to the Monday edition as the company tells Chinese clients it's preparing H200 AI chips for shipment in February after the Trump administration, of course, cleared them for sale several weeks ago. We're going to get the latest on this from Bloomberg's Laura Davison. It is pushing the stock higher, and we'll have insights from Joseph Majkut from the Center for Strategic and International Studies as we take a closer look at the data center build-out. Later this hour, Bank of America's Brian Moynihan in conversation with David Westin from Bloomberg's Wall Street Week, a conversation you won't hear anywhere else. And it's all after a look at Wall Street. Charlie Pellet has the latest on the markets for us on this Monday, and it looks pretty good, Charlie. What do you have?
Indeed, another leg higher right now, Joe Mathieu, with the Dow, the S&P, NASDAQ all advancing just about the best level of the session. Back to work Monday, holiday shortened trading week, and indeed, Santa Claus rally underway at least this Monday now. With the S&P up 46, higher by about 0.7%, 68.80 where we stand on the S&P. The Dow up 307 now, up by about 0.6%. NASDAQ up 0.6%, and the Bloomberg Mag 7 index higher now by about 0.7%. The 10-year yield 4.16%. We've got the 2-year currently yielding 3.50%. Gold is up 2.3%. Looking at a record right now, the precious metal up $99 the ounce. 44.37. West Texas Intermediate crude higher by 2.3%, 57.82 a barrel, and Bitcoin up 1.3%, 89,270 now on the Bitcoin. So bottom line here, broad advance underway. Case in point, Russell 2000 index of small cap shares up by about 1.6%. Paramount Skydance this Monday has sweetened its bid for Warner Brothers Discovery, including offering a personal financial guarantee by Oracle chairman Larry Ellison, as it seeks to beat out a rival bid from Netflix. Oracle shares, they're gaining 3.4%. The focus of all of this, Warner Brothers Discovery up 3.5%. Paramount Skydance surging 4.5%. And right now we've got Netflix, though, in the red on an update for much of the market. Netflix looking at a loss of just about 1%. So again, recapping here, stocks higher, S&P up 45, up 0.7 for on-demand news 24 hours a day. Subscribe to Bloomberg News now wherever you get your podcast. And back we go to Washington. Once again, your host here is Joe Mathieu.
All right, Charlie, thank you so much. Live from New York, Charlie Pellet, the voice of Wall Street and the New York subway. We'll be back in about 20 minutes' time with his read on the Monday trade here. It's going to start getting quiet, right? That's the deal. Holiday light volume, as we like to say in a week like this. But hopefully the melt-up will continue and Santa Claus will make everybody happy by the time we get to Thursday. I'll be with you for the balance of the week, at least on the days the market is open, and I hope that you will be as well. We're still going to have a lot to talk about from the world of politics, this hour being no exception. Although I will tell you, it's a ghost town in Washington. On one end, you've got an empty White House. The president's in Palm Beach, where he's going to be speaking actually a little bit later on today with the defense secretary and the secretary of the Navy as they talk about the Golden Fleet. That'll take place around the time of the closing bell or a little bit later. On the other end of Pennsylvania Avenue, you have an empty Capitol because lawmakers have headed home. And, of course, they were out of here before the end of last week, having whiffed on a health care solution. The cliff is looming. We're all going over it together here, it looks like. The question will be when lawmakers return, what will be the solution? And will there, in fact, be a real chance of a government shutdown at the end of January? That's when government funding comes to an end. We're joined in studio now by our Deputy Washington Bureau Chief, Laura Davison, who's helping to pick up the pieces on our coverage here in 2025 with a couple of important stories still percolating. Laura, it's great to see you. Just for starters, the president's going to be down south, the Florida White House for the rest of the week?
Yes, and he's continuing to do some work. We'll see how busy it actually is, but he has this 4:30 p.m. announcement where he's going to be talking about shipbuilding. He's got some military officials down for that. We also know he's going to have Rick Reeder, who's one of the candidates for the Fed chair, also down in Palm Beach for an interview. So we're continuing to see some of these things happen. I'll note that he did declare that Christmas Eve and Boxing Day are both federal holidays.
Right.
So we'll see if he keeps those.
But you're making everyone work anyway, I heard. So what's the Reeder interview about? It was all about the two Kevins. Even more so, Kevin Hassett was said to be at the top of the list a couple of weeks ago. But he's drilling down the full list, it looks like. I guess for any late inspiration, what are we hearing about this?
Yeah, so a couple different things are at play. One is that Trump wants to be very certain as he makes this decision. He, had a lot of buyer's remorse when he picked Jerome Powell. Mnuchin was really pushing Powell as the candidate, and Trump almost instantly regretted that decision. He doesn't want to do that again. And also Scott Bessent, who's running this decision-making process, doesn't want to sort of force Trump's hand on anything. So he's bringing in all the candidates. Chris Waller was also at the White House last week for an interview, sat down and spoke with the president for about 30 minutes. So this is really just Trump kind of checking off all the boxes here. But also, we did hear Trump a couple weeks ago say he'd narrowed it down to one candidate. He had made his decision. And now we see him saying, well, there's a couple I like, which may indicate that Trump sort of made his mind, but maybe is now, has learned more, has seen some of these people on TV, hasn't been quite satisfied, and wants more information before he moves forward.
Interesting. He said at one point pretty recently he had made up his mind, right? He was in the back of Air Force One. He said he knew he was going to pick. So is he going back on that or just waiting for somebody to surprise him?
It could be a little bit of both. That one, he wants to see, does someone come out of the blue? Someone like Rick Reeder, he doesn't really know as well. It hasn't been in his orbit. People like Kevin Hassett, he's known for years and has a very good sense of what they'd be like. We also know that Trump likes to draw out these decisions and kind of create the drama, the suspense. We saw this with J.D. Vance's pick. He was picked hours before he had to be on the floor of the Republican National Convention being, doing all the official things for the candidate. So we could see a similar kind of, really waiting to the last final moment for Trump to make a call here.
Interesting. Important story coming out of NVIDIA today that has everything to do with this White House, Laura. It was a couple of weeks ago we were talking about the administration's decision to greenlight the sale of H200 chips to China. And this would be a generation behind the Blackwell chips that, again, were also floated as a potential bargaining chip in talks with China. But now NVIDIA, according to a report, is in fact packaging them for sale. By mid-February, they're telling clients. This is something that Jensen Huang managed to navigate very effectively here in Washington, isn't it? This
is really in just about a year. He has been able to really, kind of use all the lobbying maneuvers. And NVIDIA didn't have a large presence really before the past year, 18 months. What we're seeing, though, is a lot of opposition in Congress, particularly from Republicans, some of those more national security, foreign hawk members. There's a bunch of different bills that are in the works. Whether those can actually, get up and running, get passed, have any sort of effect. But these would put a lot of guardrails on the president. And this could be a potential big clash we see brewing between Republicans on the Hill and the White House. I was going to say, but gosh, and Democrats have been flagging this as well. When you talk to Raja Krishnamurthy or others on the China Select Committee, for instance, they think we're mortgaging our national security for a trade deal. Yes, that is essentially where they're coming with. And so there may be, we've seen these bipartisan coalitions come together. We saw this on Epstein. We could see this again on NVIDIA and Blackwell saying, look, Mr. President, this is a step too far. We just simply cannot abide by this.
It's great to have you back, as always, Laura. Good luck this week. Something tells me we'll see each other again on the air. Laura Davison, our Deputy Washington Bureau Chief, with us here in our Washington Bureau, getting the week of Christmas off to a start here on Bloomberg TV and radio. The president, of course, has done a lot of talking about AI. When it comes specifically to regulations, the competition between national or federal regulations and state regs, as well the need for clean, uninterruptible power. This is something that we have heard about quite a bit from the president of the United States, in this case back in August. Listen.
Because of the genius and creativity of Silicon Valley, and it is incredible genius. Without question, the most brilliant place anywhere on earth. America is the country that started the AI race. And as President of the United States, I'm here today to declare that America is going to win it.
God knows the administration has put its chips on the AI story, the AI spend, the AI race. And this bit of news from Reuters about NVIDIA finally putting up H200s to China certainly has investors in a good mood. It's got shares of NVIDIA moving higher here, up a little more than 1%, but the whole space is moving higher along with all of the Mag 7, well, with the exception of Apple today, but that's not so much an AI story. This brings us to the broader conversation about the data center build out. And if you just get on the terminal or get online, go to whatever site is, search data center, and tell me what kind of headlines you see. They'll talk about NIMBYism. They'll talk about the need for energy. They'll talk about power and electricity rates going up. And they'll talk about the regulations that we just mentioned. That's why we wanted to spend some time with Joseph Majkut, director of the Energy Security and Climate Change Program at CSIS, the Center for Strategic and International Studies, the home of Gregory Allen, who's had some great conversations with us here about AI. And I've been looking forward to this one with Joseph. It's great to see you. Welcome to Bloomberg TV and Radio.
Hey, thank you for having me. A real pleasure.
Everyone's got a different complaint, it seems, at the moment about data center. It went from a story of inspiration over the summer. By the time Jensen Huang got here for the big GTC conference in Washington, we couldn't say enough about how early the innings were that we were in. Now there's a big worry about, boy, we're bumping our heads against the ceiling on energy capacity, on NIMBYism, on just available ground, and of course the fight over regulations. Let's start more broad here, if you would. When you see a story like this and AI stocks are popping up again, where are we in this race?
You know, I think it's a little bit like a tale of two cities. It's the best of times, it's the worst of times.
Wow.
Looking back at 2025, it's been a remarkable year of continued acceleration. You know, industry reports released a couple weeks ago showed that hyperscalers signed contracts for new data centers as large in Q3 of this year as they did in 2024 altogether. And when we think about the build out that we expect to see over the next 5 years, that's going to continue to happen. All of the challenges that you raise, power availability, water use, a general sense that society's not getting the benefits of the data center build out, those are going to almost probably get worse over that whole acceleration period rather than better.
That's really interesting because, you point water use as another one. A lot of people are just hearing about these data centers. If you live in Northern Virginia, outside of Washington, that's been your reality for a while. But somebody comes to your neighborhood, they want to put up a data center, and they say, well, you're going to take my water away and you're going to make my electricity rates go up. And so it's started a conversation about what can these data centers and these projects do on their own off-grid. And will that be the answer to all of them?
It won't be the answer for all of them, but it'll be a big part of the answer, particularly, I think, for the big ones. So let's say you want to build a really large data center, right? You have to spend a lot of money on the chips. You have to spend a lot of time and effort to get the right software and data in place. And one of the things we're seeing develop in the industry is, so they look at these large sort of gigawatt scale facilities, is you need to probably bring your own power. And then the real question for you as a developer is, can you build the right mix that's going to be reliable? And how much do you trust your on-site generation for providing those chips with power all the time, 24/7, because you want to be running them. They're so expensive. You want to be running them as much as you can. And that's where we're seeing a lot of really interesting policy development between regulators and developers so that developers can bring their own power, build quickly, not burden everybody else, but also rely on the grid when they need to.
Really interesting. This talk of nuclear, I think for many people who've sent stocks like Oklo and Constellation to record highs this year, they're starting to come down. And hold on, guys, this is maybe a 5 or 10 years out story. We're not building a lot of new nuclear power plants. You specialize in energy, and I'm just curious specifically how you look at this space now, and if we're really telling a natural gas story for the next several years.
I think the story breaks down into two timeframes, Joe. Over the next few years, we have to use what's right in front of us, and that's going to be a mixture of natural gas, solar power, increasingly batteries, a big surprise over the past year, and a really strong outlook for next year. And then, of course, you've read the stories about the few nuclear reactors that are sort of constructed, recently retired, can be restarted. But, we don't have a dozen of those laying around. It's really 2 or 3 projects. Post 2030, that's really where I think the sort of new nuclear technologies could come online, where even older technologies, the large nuclear reactors that we built much of the industrial capacity of the late 20th century upon, could be back on the grid, coming back onto the grid. And then, of course, there's questions around, how much natural gas are we going to be building in the 2030s? What are the price pressures there? For the next 5 years, the story is almost kind of written. It's just how quickly can we do it? And after that, then we get into sort of policy and strategic thinking around energy sources.
I want to ask you about regulation, but with regard to power, as you see Michael Burry, the guy from the Big Short, who's been shorting NVIDIA and really questioning this AI spend, which he says is a circular investing destined to fail. He's specifically calling out NVIDIA today for what he refers to as power-hungry microchips over alternatives, questioning the longevity of, say, a Blackwell or a Rubin, and its give-and-take deals and compensation. The more efficient these chips get, the less power they'll need in a data center. Could we be in a situation where we were overbuilding or overlaying fiber, for instance, a lot of years ago, where we're designing these data centers for this massive intake of power, when at some point they're going to be in a box?
I think there's two ways to look at that question, whether you're looking at it from the firm level or from the sort of societal level. You know, in our modeling, we incorporated significant efficiency gains in the accelerated chips necessary for AI.
So that's already part of your view.
We already see 90 gigawatts of data center demand in the U.S. by 2030 for AI alone, that leave alone traditional web services. And that's a medium to upper end estimate when you look across the range of consulting firms and industry specialists. So efficiency doesn't get you out of the need to build a lot of new data centers. Now, it could be, like, for a variety of reasons, we don't end up needing all that capacity.
Sure.
Maybe it's a bubble, something like that. If you
there
built
goes $1 trillion.
So say you built a lot of electricity generation capacity, society can absorb that capacity. AI data centers are the big story right now. There's a lot of market correction and adjustment happening because this is just a tidal wave of new demand. But if you look at the next 20 years, we expect to see significant electricity demand growth in the United States for a variety of reasons. You've got reshoring of manufacturing. Chip fabs take 500 megawatts to a gigawatt themselves. You've got electrification of the light passenger duty fleet. You've got electrification of homes and businesses, and you've just got economic growth. You know, the story of the last 15 years in energy and electricity for the United States was one of plenty of new supply and major efficiency gains, mostly because of LED lighting. Over the next 20 years, we need a lot of electricity. It's fundamental for our economic security and growth. And so I'm very sanguine about the risks of overbuilding
you can't
electricity
have too much, it sounds like,
over the next couple decades.
The EO that President Trump signed recently on a federal landscape for AI regulations versus each state having its own and creating a patchwork here. And he says, if you're NVIDIA, you just can't do business easily enough. It slows things down to the point that we'll lose the AI race. Is he right?
I think that everybody, when you talk to, I talk to my colleagues at CSIS, you talk to people here in town, everybody agrees that a federalized system would be better for diffusion than a patchwork. What does that federalized system look like?
That's the issue.
It's a political
They still
debate.
have to write that, don't they?
Yeah, of course. And there, I think there are big debates about how do you incorporate safety, how do you deal with minors, how do you deal with privacy, and you know, whether you're a federalist or you look at federal authority as being the key here. We still need to get over these big political debates. The structure of the regulations is only half the battle.
The content side is of course one thing, and we can talk about whether AI is eventually going to eat us alive. But in terms of the data center build out, having a federal policy would hasten the end of this race, would it not?
Sure, and we've seen from the Department of Energy in particular a real effort to use federal authority to help speed the build out on the electricity side. They've made significant investments in nuclear power to help deal with the sort of sustainable growth of the industry in years forward. But they've also looked to change the way regulations apply to large loads like new data centers, sort of federalizing the way that works. That's traditionally a state responsibility. There's an ongoing case at the Federal Energy Regulatory Commission, the federal body in charge of the electricity grid.
Friends at FERC.
To figure out how to do that, right? And there again, there's some political debates. Who needs to pay for grid upgrades when you're building new data centers? But FERC's in a good position, I think, to resolve a lot of those things and make sure that the best models are used nationally.
Really interesting. This has been a fascinating conversation. That build out still has another 5 years. Is the first point you made. That's right.
If you're in a second industrial revolution, it might be 25.
Fast. It might be 25 years. That sounds like second inning? I don't know. Joseph, don't be a stranger. Joseph Majkut, CSIS. Great conversation. Thank you for the insights. We'll assemble our political panel next. I'm Joe Mathieu in Washington. Balance of Power. This is Bloomberg TV and radio. We are tracking a third tanker. Pretty remarkable developments over the weekend as the United States seized a second oil tanker off the coast of Venezuela from the so-called shadow fleet, and then progressed to a third. This one is a little bit different. The Bella One is the name of this ship here. The U.S. forces chasing the Bella One as it was en route to Venezuela. They also boarded Centuries, a ship owned by a Hong Kong-based entity, on Saturday. That was the one that I mentioned we actually intercepted here. But now on the way to a third, it's an empty tanker that is now making its way out of the region. And it reminds us of not only what's happening in the theater there, the president labeling it a blockade only a week ago, although it is technically not the definition of a blockade, which is an act of war. In this place, a quarantine, in this case, I should say. But more broadly, what is the motivation and what's the end game for the United States in Venezuela? Is it, in fact, regime change? We're starting to hear more acknowledgement of that possibility from the administration, but it's been an evolving justification that started with, of course, the war on drugs. That's why we were striking alleged drug boats leaving Venezuela. More recently, it's been about oil, as the president suggested just last week. Listen.
Getting land, oil rights, whatever we had, they took it away because we had a president that maybe wasn't watching. But they're not going to do that. We want it back. They took our oil rights. We had a lot of oil there. As you know, they threw our companies out, and we want it back.
As he said, they took our oil rights. We want them back. Let's see what the panel thinks about it. Bloomberg Politics contributor Jeanne Zaino is with us, democracy visiting fellow at Harvard Kennedy School's Ash Center. And we're joined as well by Republican strategist Greta Joynes, policy director Brownstein Hyatt. Great to have you both with us here. Greta, what's your thought about this? Frequently, we hear different justifications for what's happening. Marco Rubio might have one thought, the president might have another. Is this about drugs, oil, or all of the above?
I think it's about all of the above. I think the president was certainly looking at the flow of fentanyl into the United States and the devastating toll that Americans have had in ingesting these illegal drugs that, are designed not only to put Americans at risk, but also to basically take their lives. So I think that was initially what the president was interested in, is stopping this flow, but also in trying to put pressure on the Venezuelans to stop all of these illegal actions and all of these illegal drugs from coming into the United States. Certainly, there was a renewed focus on the Venezuelan government's taking of not only U.S. companies, materials and facilities in Venezuela, but certainly also what has happened to the oil markets in South America.
This third tanker is interesting here, Jeanne, and we're showing images of the seizure here with the view from a military helicopter. We're pretty good at boarding these vessels and dispatching them pretty quickly, but there have been questions about whether this third cargo ship was in fact sanctioned and what the end game is here, particularly if it's empty.
Yeah, Joe, and that's absolutely the question. What is the end game for the administration? All of the talk about drugs, well, if that was the case, we wouldn't be going after Venezuela, who was shipping cocaine to Europe. We would be going after China via Mexico if it was about fentanyl. We wouldn't be pardoning major drug kingpins like the president has just done. What this is about is what Susie Wiles said and what the president has been clear on. It is about regime change, and that is consistent with a president who wants to take over the oil reserves in this country. If you go back to 2016, Donald Trump said we made a mistake by not doing that in Iraq. And he is saying the same thing here as it pertains to Venezuela. He wants regime change and he wants the oil in this country because Venezuela is an incredibly dysfunctional country. It has been for decades, but it is also one of the most oil-rich countries in the world. And then you look at Marco Rubio, Secretary of State, and this has the added benefit, because where is this oil going? It's going to China and Cuba, of helping destabilize Cuba. Because, of course, if you stop the flow of oil from Venezuela to Cuba, you destabilize that economy. Mm-hmm. They simply cannot continue. And so that is something that also serves the interests of Marco Rubio. So I think we're seeing a conflation of that here, all of which the president is supportive of because he is intent on making deals.
I'm glad you mentioned Cuba, Jeanne, because that's an interesting bank shot here for the administration, Greta. Is that part of the calculation to create an economic depression in Cuba?
Well, I think there already is an economic depression in Cuba. So if that was the goal, mission achieved. But I do think there are certainly ways that Marco Rubio, who is a Cuban American, are certainly looking at opportunities to provide Cubans with the potential opportunity to not be hamstrung by this horrific government that they've been under, and to put pressure on them. So is that sort of the central thesis behind all of this? No, I don't think so. Is it potentially an added benefit? Maybe. But I think that the secretary is certainly looking at this holistically.
Let's hear from the secretary, Marco Rubio. He was speaking about the status quo, if you will, with the Maduro regime in a news conference. Here's what he said.
It is clear that the current status quo with the Venezuelan regime is intolerable for the United States. The status quo, that they operate and cooperate with terrorist organizations against the national interests of the United States. Not just cooperate, but partner with and participate in activities that threaten the national interests of the United States. So yes, our goal is to change that dynamic. And that's why the president's doing what he's doing.
Okay, so it sounds like Mr. Maduro should keep the bags packed, Jeanne, keep a clean set of clothes handy here. I guess when you start to extend this conversation, though, if that in fact is the justification and the grounds for our involvement in a potential regime change, I'm just going to go back to something you mentioned. What does that mean for Mexico, for instance, which, of course, has major drug cartels that are moving way more drugs over our border via land? The president's talked about land strikes. Would that include Mexico?
Yeah, I mean, we haven't heard that yet. We have heard him specifically talk about Colombia. That is always in the offing. What's fascinating, and by the way, Joe, Marco Rubio pulling a Vladimir Putin with that extensive press conference was utterly incredible. What is fascinating is this is coming from an administration and under a president who, when he campaigned, and a huge part of his base is to put America first, not get us involved in endless wars and regime change and the like. He made his name politically in part criticizing George Bush, Hillary Clinton, and others who supported invasions in other countries for a variety of reasons. Now he's doing the same thing, and you hear Marco Rubio there. This is very, very popular in southern Florida, what Marco Rubio is talking about. I think a big question, is it popular for the rest of the country, particularly on the Republican side? So you have a lot of questions there about splitting the base on an issue like this.
Yeah, I'd love to get to you on that, Greta. Because we've, of course, heard a lot about this idea of the president being at odds with America first, not to mention his own quest for the Nobel Peace Prize to be beating the war drum right now in Venezuela. Means what to you when it comes to that part of the MAGA base?
I do think the Marjorie Taylor Greene, she certainly has a vision for her future that I think differs a little bit from where the president has been. I think the president is ultimately looking at ways to cut deals around the world to make a more peaceful world for Americans first to exist in. And I think that includes stopping fentanyl. I think that ultimately includes certainly keeping the Southern Hemisphere as peaceful and ensuring that there are relationships in these countries that ultimately are beneficial to Americans. I think that there is certainly disagreement on the best way to do that and ultimately to achieve that. But he was elected president, and I certainly think that Marco Rubio and President Trump are aligned in that vision and ultimately working with people like Steve Witkoff and others within the administration to really aggressively go around and end a lot of wars around the world.
Well, productive and constructive were the words from Steve Witkoff over the weekend, Jeanne. He was down in Florida near, of course, or at his resort near Miami, and they were meeting with Russians once again, he and Jared Kushner, about ending the war in Ukraine. How many meetings can be had like this, described as productive and constructive, without anything happening?
Well, I think we will continue to hear that. And I'm all in favor of meeting and talking. I think that is absolutely the right thing to do. I think one of the problems that the president is confronting here is, on the one hand, if you are telling the world that you have the right to engage in regime change in Venezuela, in Colombia, in your hemisphere, how can you then turn around and tell Vladimir Putin with a straight face that he too cannot engage in regime change in his part of the world, right on his border in Ukraine? How can you tell China that they can't go into Taiwan? This creates a problem for the president. I think that is one of the issues they're confronting. But, on this whole issue, Witkoff is talking to Ukraine, talking to Russia. But the problem is Russia has shown no interest in moving. This thing is going to be decided on the battlefield. Unfortunately for Ukraine, they are outgunned and outnumbered, and Europe isn't even showing spine to support them in the way we thought they might. So I don't think that these talks are going to end up constructively at this point.
Starting to feel familiar, as noted by Jeanne Zaino, and a great panel today. Greta Joynes, Brownstein, Hyatt, Jeanne Zaino, Bloomberg Politics contributor, and Democracy visiting fellow at Harvard Kennedy School's Ash Center. We thank you both for the insights here on Balance of Power. And as promised, an important conversation now that we want to bring you to World Headquarters in New York for my colleague David Westin, the host of Bloomberg Wall Street Week, with the CEO of Bank of America, Brian Moynihan. David, up to you.
For our Bloomberg audiences worldwide, I'm David Westin. I'm delighted to be joined now by Brian Moynihan. He is indeed the chair and CEO of Bank of America. So first of all, happy holidays, Brian. Great to be with you.
Happy holidays, David. Good to see you again.
So let's start with the year. It's been a very strong year for the markets. By the way, a very strong year for Bank of America in the markets. The economy's done well, not as well perhaps as the markets might indicate. Do you think the economy is in better shape because the markets are really over-predicting what's going on?
Look, as you look at our team, we have a great research team, as you know, David. Their projection for 26 is a strong economy, 2.4% U.S. GDP growth. And that's strong not only on a relative basis to trend above 2%, which is the trend. It's strong that way. But it's also strong relative to the rest of the world in the sense that you see that other, basically, whether it's Euro or Japan, other parts of the economy, we predict those to be flat to down. And so it's strong on an absolute basis relative to the United States history and strong on a relative basis to the other economies. And that's because, frankly, the great American engine of capitalism, consumers are driving it. And the markets are valuing that future growth rate, and that's why they've been very constructive this year.
How much of that engine that you talk about is AI investment? Because that certainly has kicked in this year. How much of the growth is really attributable only to the AI investment?
I think you'd have to get people to parse it. But for this year, frankly, the AI investment's been building during the year and is probably a bigger contributor next year and the years beyond. And so if you look at the data center build out, which is one of the ways it evidences itself, that's a big deal. If you look at client spending, like us spending on AI, that's higher than it was last year. But frankly, overall spending levels are shifting towards that, not necessarily growing at a mid-single digit rate type of number. So I think that's part why the reason we feel constructive for next year. We think AI spending continues. We think there's benefits to the American taxpayer from tax rebates, lower taxes due to the tax bill going through and being effective for next year. And we think the expensing and other bonuses for businesses are good. So all that leads to our confidence that we go from basically a 2% type of growth level this year, plus or minus up to 2.4%, which is all due to that. And AI is kicking in more and more. And so it's not all attributable to AI, but that's having a marginal impact that's pretty strong.
So much of the American economy is supported by the consumer. And you at Bank of America have a really powerful viewpoint into the American consumer. How's the American consumer doing? Because it has been very strong. There have been some people saying it's starting to slow down.
Yeah, and so I think you have to step back. We look at American consumers, 70 million consumers, putting $4.5 trillion plus into the American economy every year. And we've tracked the way that goes in the American economy for many years. And so in the third quarter, it was up about 5% over last year. As we look at the fourth quarter here so far in October, November, I'd say it in the 4.5%, which is very consistent with a very solid growing economy. In the end of the day, it's going to work against wage growth. And we see in the underlying consumers we have wage growth, i.e. their paychecks are going up. And so the labor market's flattened out a little bit in terms of job growth and things like that. It's normalizing in terms of unemployment, but you still see underlying wage growth. So the American consumer spending at 4-ish% more November this year versus November last year is a very solid backdrop. The credit quality of American consumer is strong. And then you hear a lot about this discussion about different rates of growth among different income terciles or thirds. So if we look at the bottom third, middle third, and top third of American income people in the Bank of America customer base, we do see differences, i.e. the higher income and middle income are growing faster. But even the lower income third is still growing, and that's all good. And that means, why is that true? Companies are employing people, they're paying people. Now the labor market's got a little soft, and as we look forward at 4.5, 4.6 unemployment, that is gotten worse, so to speak, than it was at the beginning of the year. But frankly, this goes back to the normalization question. If you look at the 10-year average unemployment, the 20-year, the 30-year, or 40-year, it's 5 and 6%, as you go back through time. And so a 4.5 to 4.6 unemployment rate is a very strong relative unemployment rate. It's just a lot of the years it's been below 4.5% has actually been in the last 10 years. So people are very used to numbers now, which were part of the tightness in labor in the 2017, 18, 19 era. And you had the pandemic, and it retightened. And so it's normalizing, but we feel good about all that, and the consumer's in pretty good shape. Spending more money, employed, and earning more money, but differences between different types of consumers, and then being wise in how they spend. If they, if they trade down, and all the things you're hearing the retailers talk about are true, but the aggregate amount of moving in the economy is still growing.
So you mentioned flattening out in the employment growth. There are always risks to the upside and the downside in any of the numbers that we project. How concerned are you about the downside? Because certainly the Fed is very focused on a softening labor market and whether that may be a problem for us.
So if you look at the predictions for our team and the other economists for unemployment, we're kind of peaking out at this level now in the mid to 4.5, 4.6 range, and then it sort of flattens out. But the Fed has to be wary because they have a mandate to maintain full employment, and we're at full employment now, and they have a mandate to maintain price stability and inflation fighting, and those two mandates can work together sometimes and against each other sometimes. And right now we're in that unusual case where the labor market has softened, and yet the inflation, because the massive buildup inflation after COVID and stuff is now still working its way down. Our team predicts that the inflation rate will get to the Fed's target, through the end of 27, but it's continuing to work in the right direction, which gives the Fed, in our view, latitude to keep cutting rates next year, especially in the first half. That will then provide a stimulus in the second half of the year. Those rate cuts do benefit the consumer somewhat, but in fact benefit small businesses, because in mid-sized business, they borrow on lines of credit, which are floating rate indices, and as rates come down, they get instantaneous benefit. And if you hear our small and medium-sized businesses are pretty optimistic about next year, telling us they expect to grow, they expect to hire more people, and those small businesses are the backbone of the U.S. economy. We're the largest small business lender in the U.S. economy, so we see them being very active.
This year has been good for the markets. It's also been good for Bank of America. I believe you hit an all-time high in your stock price today, intraday at least. What do you need in 26 to continue the growth?
Look, we just need our team that's done a great job for us over the last several decades to keep doing it. And what they need to do is go out and get one more client and do one more thing with every client we have. And they know that across all of business, whether it's our markets teams, whether it's our global corporate investment banking teams, our consumer teams, our wealth management teams, all of them need to go out and just drive more business. And that organic growth engine, which we described in our investor day a while back, that is intact. It's been growing with the market. And now, because of some dynamics in the repricing of the balance sheet, we'll get more earnings lift out of it like we did in the third quarter. But that organic growth engine, more customers and more with each customer, has been driving a Bank of America, and our team just needs to do more of that, and they know that.
How sensitive is your performance at Bank of America to what the Fed does on interest rates? I mean, if it actually cuts faster than people think, or doesn't cut as fast?
Look, at the end of the day, if our team predicts, and most of the economists out there predict, that the Fed funds rate will go from where it is now down closer to 3%. And the debate might be 2 3/4, 3, 3 1/4, but it's a debate. That nominal rate environment from, say, 3% Fed funds rate to maybe a 4, 4.5, 10-year Treasury rate. That's a good normal interest rate curve where banks can do well, and our bank can do very well. We have $2 trillion of deposits, and a trillion of those are low interest, no interest accounts. And if the nominal rate environment sits in around 3%, it's a very good environment for our company to grow its earning streams while it's growing its customer and its balances and its deposits and loans.
You recently had Investors Day, and you went through in that your investment in tech, which, as I recall, is $10 billion over 10 years, $1 billion in this year alone. What did you get for that? How do you monitor the return on investment of that kind of tech investment?
Yeah, so each year we have about $13 billion in total tech spending. About 9 or so of it is the running the environment, protecting the environment, and sort of what they call the infrastructure, both the systems and protecting those systems and new software purchases. About $4 billion is what we call initiatives, and that's the new products, new services, the things my teammates love to talk about. And what do we get for it? How do we measure it? We literally look at every project we do and say, what's the payback in terms of additional revenue or additional expense or expense taken out of either reducing work or simplicity in the systems environment. So we measured all that. It's got to be above our cost of capital. That's a technical way to measure. But what you really see is that deployment of lots of capabilities to help our customers do much greater things with AI, with agents and all the things we're working on, but also our teammates to do great things. So this year we deployed, our 365 Copilot will finish the end of the year with 200,000 people up and operating on AI, and it's just tremendous. And that's all part of that major tech budget. But also, as part of that is just the nuts and bolts of having a better trading system or enhancing that trading system or our data. So that $4 billion plus a year is really important to drive the initiatives that we have as an innovation company.
So we are in the early stages of AI, even though you've been doing it at Bank of America for a while now. How far will this go for Bank of America? What will Bank of America look like 5 years down the road because of AI? How transformed will it become?
Well, I think to answer that question, no one knows precisely for sure. But what you will know is we'll be applying more and more of automated intelligence or augmented intelligence, as we call it, with a person using AI, using that to be more effective. And that'll affect all the businesses. So if you look historically, we deployed AI more than 5 years ago with a product called Erica. Erica was a agent bot, a small language model, and all the words we use today. Back then we didn't. And over the last 24 hours, Erica interfaced with 2 million Bank of America consumers and answered the questions. It went from 200 questions it could answer to about 700 questions it could answer. About 20 million people use it. So we have great experience of how that worked. But what part of that experience was you have to have your data perfect. You have to have the controls around it so it answers the question right so the customer's getting a good answer. And you have to be able to transmit that answer instantaneously on an inquiry across the 100 systems that touch our mobile banking or our digital banking out to the customers. So it's a lot harder to do. Now, the interesting thing is we took that Erica and we put it in our institutional side business, so Cash Pro with Erica, and hundreds of thousands of interactions with institutional customers using it to answer questions about their accounts. Then you took it and put it in an internal environment so people could work with the IT department to get their laptops replaced or passwords changed. So we use that model plus other models, and we believe it has a big impact. Where exactly it goes, we'll figure out. But what we know, there'll be more of it. It'll be helping people be smarter, more efficient, help us take work out that we can get out and invest in work that helps our customers and our teammates be more successful. And we are after it every day. And we have 30 proofs of concept going. We have money we're spending and all that stuff. But a lot of this is really fairly controlled right now to make sure that we can actually deliver what we say when we put AI on it. We just can't let it run and have answers that customers won't have faith in. And that's why it'll be a little slower build out than I think people see, but it'll be a relentless build out.
From your experience so far and what you project out, when you look at the return on that investment in AI, how much of it's from growing the top line, that is increasing revenue, and how much of it is from cost savings because of use of AI?
I think when you look at it in the very near term, it's mostly about process engineering, so embedding AI into discrete processes to take out work, and that we've been doing for years, for several years. So we see it, and before that we had machine learning and other digitization, and that was a capability that we built, but also the customer would use, and that's an operative term here. Is the customer has to use the techniques and things that we build. I think over time it'll be much more about enhancing the revenue side. And so if you look at our proofs of concept, our projects going in. They're not proofs of concept anymore implemented. We have a relationship management preparation tools or pitch book preparation tools that allow us to do more faster turnaround, better preparation for meetings, better idea generation for meetings with clients, and we know that that will generate additional revenue. So there's equal parts revenue and expense in the last 24 months, 12 months. It even go back to Erica's start 3 or 4 or 5 years ago, whenever it started. It was more about removing tasks and costs. I think that's moving because people are getting more comfortable with its ability to answer questions and help them prepare for a meeting with a client and what they need to think about, whether it's a wealth management client or a commercial banking client.
Including Bank of America, but going beyond that in general to our economy, because AI appears to be being transformed, and goodness knows there's hundreds of billions of dollars being invested. Can we get the return on investment as an economy without cutting a lot of jobs?
I think the question will be, how fast the jobs will grow around and the new jobs will grow and the shift of jobs. So if you look in the last 50 years or so, we had a lot of technology come in, and we have twice as many people work in the U.S. than we did 55 years ago. So think about, David, in our lifetimes, what we've seen. We've seen, the desktop computer to laptop computer to the phone as a computer, et cetera. Think of all that technology coming in, and we employ twice as many people. So the question will be, will you have more people doing different types of jobs? And so my advice to myself and my advice to my teammates is simple: learn it, harness it, make it your agent to help you be more successful. And yes, does it change the human content of work in areas like finance and audit and legal that we hadn't done it before? Yes, but the people use it effectively will be able to do more and generate more revenue, and then potentially generate more jobs out there, because there's more people earning more money, spending more money. America's making more money. It should all be good, but it's going to be an interesting transition.
Brian, as CEO of Bank of America, an important part of your job, maybe the most important part, is managing risk, upside risk, downside risk. As you look at the risks out there, how do you manage, if at all, for the risk that, in fact, we're over-investing in AI as an economy?
Well, I think as an economy, the issue would be if it got overheated and it retracted, what would the impact flow for us as a company more into, consumers, job loss, things like that. And right now we see that as being relatively limited because it's a narrow a group of companies, a narrow group of spending, and the companies are spending and have a lot of money. As a lender, we look at the leverage on these projects and make sure that we're comfortable with that and the duration of the contract by the person who's going to commit to use the data center, and therefore that's a revenue stream. You think about the tenant, for lack of a better term, the quality of that tenant, the length of that tenant. Those are key issues. So we look at all that. And then for the market valuations, our team thinks that you'll see, you could see a debate about whether the AI stocks are overvalued or undervalued. Our team talks about that. But what people are forgetting is there's a lot of other companies are coming in and producing more and more earnings growth. At the end of the day, the earnings growth is what will drive the market. And so it may move around, but as Chris Heisey, our teammate, has said on Bloomberg and other places, it's a proud bull. He thinks, the market ahead is very constructive, and our team has, mid-single digit S&P growth predicted for next year.
So, Brian, one last question as we head into the holidays and into the new year. What's the biggest upside risk that you see in the new year?
Well, I think the risk is that the upside potential is for the series of policies that have come out: taxation, trade and tariff, immigration, and deregulation. I think the biggest one is still yet to come for businesses, the deregulation piece. And it's falling into place. And if that works the right way, then you'll see the U.S. Kick another level of potential growth. And when the U.S. kicks in growth, the world will have growth, because at the end of the day, our economy is the biggest economy. We're the biggest consuming economy. And so if our citizens are employed, working, and earning more money, that's good for the world.
Is there any downside at all because of the uncertainty about policy? Because it's moved around a bit.
There has been a lot this year, honestly. And if you talk to our small business customers, for example, in the most recent surveys, they're now getting an understanding of how the tariffs are going to affect them. It took a while for them to settle in, and they can see the 10, 15, 20% level, and they're adjusting supply chains. That's still work going on, and the ability to pass through those costs and things like that is coming through the system now. Their biggest worry, what they tell us, is to get employees, and that has a bit to do with settling in on the immigration policy and it sort of getting more precise in the minds of a small business owner or mid-sized company. Can I have the labor predictability that I need. And so that issue, I think, is straightening out as the precision of the work on immigration policy continues through. And that was probably is more on the minds this year. As that settles in and the trade policies have settled in during the course of the summer, I think they're feeling better about understanding them. And they still have to make some adjustments, but they're feeling better about understanding them.
Brian, as many of us head into a break, I hope you and your colleagues have a wonderful holiday. Thank you so much for being with us. That is Brian Moynihan. He is Chair and CEO of Bank of America. Back to you.
All right, David Westin, many thanks for a great conversation, as always. Live and only on Bloomberg TV and radio. Of course, David is the host of Bloomberg Wall Street Week with Brian Moynihan. We covered a lot of ground there, and fascinating to listen on what has been an up day for the markets. Pretty good so far, with a hint of a Santa Claus rally. The S&P 500 right now is up about 0.5%. Same can be said for all three of the main indexes. The NASDAQ up about 0.5%. Same for the Dow Industrial Average, rising a little more than 220 points today. Even Bitcoin is higher. Not by a heck of a lot, but a little more than 1%, trading back above $89,000. I'm Joe Mathieu in Washington. Thanks for spending part of your Monday with us here on Balance of Power on Bloomberg TV and radio. We'll have much more to talk about on the late edition of Balance of Power, starting at 5 p.m. Eastern Time, with our eyes on the White House. An important event that'll be taking place in the 4 o'clock hour after the close. The President of the United States, the Secretary of Defense, and the Secretary of the Navy will be holding forth. This is actually in Palm Beach. My, of course, muscle memory points my attention to the White House, but the president is at the Winter White House today at Mar-a-Lago, and will be announcing plans with the Navy to build a new class of warship, the FFX, as part of the president's Golden Fleet, sending shares of HII higher today. Huntington Ingalls right now up about 5.5%. We'll have a lot more on that coming up, as I mentioned, on the late edition of Balance of Power. It's Bloomberg Business Week Daily. That starts at the top. We'll have another check on Wall Street for you starting at 2 p.m. Eastern Time. I'm Joe Mathieu. This is Bloomberg.